Australia, of course, has been a global outlier in the current easing cycle, as most developed world central banks, including the Federal Reserve, has already cut substantially. Oh, by the way, the Fed is likely to announce the outcome of its meeting later today and will probably stand pat. But the RBA, in tackling inflation through 2022-23, opted for a lower peak rate than global counterparts because it was worried about the capacity of heavily geared households to cope with significantly higher mortgage repayments. But now we got a softer than expected annual underlying inflation figure of 3.2% for the 3 months to December from the ABS today. And journos are out in force, saying a rate cut from the RBA in February is all but certain now. And whilst the market has gone all in with an 80 to 90% chance of a cut, there is also a reasonable case to hold steady and wait for more information on the economy. So perhaps it's more like 50-50. True, inflation is moderating towards the target, and the unemployment rate remains at around 4%, which is a low. The headline consumer price index has fallen from a peak of about 8% back in December 2022 to that 2.4% level at the end of last year. But the recent fall below 3% has been helped along by government subsidies for energy bills and rents, which artificially lowered the headline inflation rate. In the December quarter, there were just so many different subsidies washing through the system from federal and state governments that they will not all be trimmed out from the underlying inflation metric. So given the breadth and depth of government costs of living support with energy bill credits, rent assistance, 50-cent public transport in Queensland, and a revision to a previously mismeasured childcare subsidy, even the trimmed mean has been distorted by the huge breadth of government subsidies in the December quarter. So the key question is, will the politically driven handouts, which have been sprayed about the place liberally and sufficient to mask inflation even in the trimmed numbers, drive the RBA to cut? In which case, politics ahead of the election will have won at the expense of taxpayers who know that the true inflation costs are still way higher than those number-wanged. And then, of course, we have the impact of the lower exchange rates to contend with ahead, which could also be inflationary. So it's a 50-50 call for February, but perhaps politics have won, at least for now.